What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is February 8th, 2022. Oh my gosh, we got our bullish resolution today. Today we're going to talk about the price action in the indices. We'll go through my trading for the day. Before we do that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. Let's take a look at these box scores. S&P 500 is measured by the SPY, finished up 0.82%. Today was a nightmare on Bear Street. Nasdaq QQQ was once the weakest area of the market. Now today it finished up 1.12%. Small caps led today up 1.71%. The Dow Jones up just over 1%, and the ARK Innovation ETF pretty much closed flat, down 0.12%. What you'll notice is we got a large vol crush in the market. The VIX got absolutely decimated, and we started to see the preview of that yesterday, where you'll note in yesterday's video we talked about how the S&P 500 closed down, but the VIX and the VVIX both also closed down. So that was a good little hint, or a good little preview of the nightmare on Bear Street that we had today. Breadth was pretty positive, pretty good across the board. We had above 70% advancers for these four main headline indices. Then you can see even the ARK Innovation ETF, although it closed down a smidge, had 56% positive advancer. So overall, this picture looks pretty solid. Finviz heat map. I noticed what was pretty crazy today was we had significant weakness in the treasury market. The 10-year treasury futures were getting crushed in the morning. And I noticed the mega cap tech was holding up pretty well. So that bolstered my bullish view. It allowed me to take some nice day trades today. I actually caught Apple very nicely. We'll talk about that shortly. But with Apple and Microsoft holding their own in the early part of the session, it really opened the door for a lot of these other stocks to start coming online. You'll notice Facebook is still in its downtrend. It's down another 2.1% today. And that earnings report was just so horrible. And there's so many investors that own Facebook. This is one of those stocks, like, nobody thinks it can go down. Nobody thinks it can have a business deceleration. And that's the quarter that we just received from them. So yeah, another big down move for Facebook. If and when that bottoms, and Google bottoms, it's going to be very tough to take this market down. We're essentially through all of the mega cap earnings now, and I believe over 67% of stocks in the S&P 500 have already reported earnings. So at this point, with those binary events out of the way, I think we're in a much better spot. Tesla was up 1.62%. Energy got crushed today. I have a short position in energy. Let's go. And I'm up a little smidge on that, and it actually is a very small position. I try to be as transparent as possible. I never try to be that person that's like, if I'm winning the position, it was huge, and if I lost, it was very small. Now, for this, I wanted to make sure that I could actually hold the short, so I sized it pretty small, but so far so good. We'll see what happens. The travel space was very strong today, so we'll flip through some of those names. Let's go to our sectors. Sector map. XLE, just mentioned that, down 2.15%. What else was down for this session? So we had real estate was down about 0.5%. Biotech, ARK Genomics, and the ARKK ETF. Everything else was pretty strong. KWeb was up 4.08%. And I actually stopped out of a lot of my China exposure yesterday. That's just the way it goes sometimes. I've been trading for a while now, doing this for a living for several years now. And this sort of thing happens when you're managing your risk. You're always going to feel like an idiot sometimes, but it's good to manage your risk, because then there will be times where you take your stop and then it just keeps plummeting. So yeah, China really got its groove back today. Regional banks were strong as well, up 2.48%. What else was strong? Emerging markets, internet and e-commerce. So a lot of these more risk on areas of the market really came to life today, which is good. Semiconductors also got a nice balance, up 2.53%. And in terms of style factors, this was another thing that tipped me off early in the session that today could end up being a pretty bullish day. I saw within the first couple minutes a few things. Even though the market was red in the early part of the session, remember the SPY was down maybe 20, 30 basis points. Qs were down about 0.5%. the breadth remains strong in the market. And when I shared these style factors with Pristine Capital members early on in the session, I noted how, hey, these cyclicals are actually outperforming. That's not something that would happen if we were in a really risk-off scenario. So yeah, style factors, we had high beta outperforming, which is good. The small cap value, i.e. cyclicals of 1.39%. So that is a pretty risk-on configuration. And then seasonality, of course, this rhymes with the seasonality. We're about the first week complete for February, and that puts us right into this little seasonal spike into options expiration for February. So to me, it looks like a little window of opportunity that I definitely want to capitalize on. All right, let's take a look at these headline indices. And my trend model flipped to a positive 3 today. So the two components of my process are primarily my trend model and then the dark index and dark pool buyers, what they are doing. And both components of my process are firing on all cylinders at the moment. You can see the past couple days, it was a tug of war between bulls and bears, where we kept going above the 20-day, then we'd slice below it, then we'd close below it. And at certain times, I was like, man, we can't hold the 20-day moving average, so we might actually slip here. But we just continued to hold strong, and today, sure enough, we got our close above that 20-day moving average. Last time that we got our close above was, I guess technically here we got a close above, but this was like pretty weak sauce action. We basically like faded and we closed like right on it into the bell. So that one's kind of like a violation. The last time we had like a true close above it was up here on January 12th. That one ended up being a fake out. But that rarely happens, to be honest, where it's like, you know, you get the bullish signal and then the next day you just cascade. So we'll have to see what happens. I think the edge right here is marginally with the market bulls. Let's take a look at our hourly chart and check this out. Oh my gosh, I just got a new office chair because I've been having lower back pain. It feels amazing. All right, let's take a look here. This is our weekly value area. You can see it's been like a mess of a choppy action over the past few days. Look at this. We were trading below our weekly point of control. Weekly point of control is at 4499. So right down that level, that is significant. And we were trading below it for most of the day in the morning. And then we saw some strength in the market and we closed above it. Next level to the upside, now that we're above the weekly point of control, is this 4538.75. I do notice though that the market has really been struggling right around this 4525, 4530 area. So it would be a pretty significant milestone if we could actually reach up and tag this weekly value area high. All right, let's take a look at the Nasdaq. What did the Nasdaq do today? Let's see how the structure is looking. So Nasdaq not quite as strong as the S&P 500. This one did not close above the 20-day moving average. But hey, at the very least, we're consolidating, we're holding this bottom of value here. And especially too, Nasdaq finished up 1.28%. This was another thing that really tipped me off that something different was happening in the market today. These are our 10-year Treasury futures, and look, we lost the bottom of value, and we're essentially cascading. These 10-year Treasury yields are moving out to the upside, and I'll show you that on this Koifin app. One sec. There it is. Boom, global yields. Here it is. Okay. So our 10-year yield is now 1.919%. This might need to update after the close, but pretty much we're higher than we were pre-pandemic. And the market overall is taking this in stride. So this to me, when I saw that these were cascading lower and the Nasdaq was actually catching a bid, I was like, this is significant here. And these are the kinds of things that you only see when you're watching the price action every day, like I do, or like some of the members of our group do, where you notice these little anomalies and these little tells using the market generated information. So yeah, I recorded a video for Pristine Capital members around midday. And I said, hey, we're seeing a few things that don't fit this bearish narrative. The first one was we're seeing an overwhelming amount of dark pool buying, which I've been covering with you guys the past couple days. Two is Bitcoin basically bottomed out. Look at Bitcoin. Had a little bit of a pullback today, but essentially, you know, we marked basically like a near-term bottom at the very least. Look at this. So Bitcoin bottomed out. the market was going to crash. Would the apex risk asset bottom out and start moving to the upside? That was number 2. And then number 3 was that the small caps bottomed out as well. So that really does not fit the bearish narrative. It's pretty funny. I'm a subscriber to the Bloomberg app, and I opened up my Bloomberg the other day, and all of the headlines were like, inflation explodes, market looks on the verge of an implosion, like all of these words in it that if you're reading, the financial media, you're just going to be so scared in terms of your investing. You're never going to get long. And that's why I prefer to use market generated information, because the market generated information, it's not trying to scare you. It's just, it is what it is. It shows you what buyers and sellers are doing in real time rather than, a journalist commentary on it after the fact. So shots fired on journalists. No, I'm kidding. Journalists are fine, but I just don't really like using them in my trading process. That's all. Russell 2000. This one closed pretty much right at the 20-day moving average. Did not necessarily close above it, but we reclaimed this monthly point of control. So again, that's not really something that happens when the sky is falling. And then our Dow Jones up 1.18%. Not bad. Let's take a look here at the VIX, because the VIX got decimated. So look at this. We sort of have this H pattern going on in the VIX. Now here's the kicker. On Thursday, we're going to get our inflation data. And the last inflation print that we got was a very easy hurdle to clear. The expectations were very high, and we were able to just bunny hop over it, and it made for some nice bullish price action when the announcement came out. If we just rip right into this inflation print, like let's say the VIX is like, sub 20 by the time the report comes out, that's where I think you have to be a little bit more cautious. So yeah, the timing is very strange with this binary event we have coming up. But for whatever reason, investors are willing to put some capital to work today. So yeah, VIX getting crushed. Let's talk about some of my trades for today. Let me just pull these up in a sec. Before I do that, we'll look at some of these after hours movers. Yeah, so after hours movers, we have Enphase, which reported earnings after the bell. It is up 16.71%. You can see some of these other solar names are following suit. So maybe this is a group to look for tomorrow. And then this new relic, I saw a bunch of people posting this on Twitter. This one looked pretty good technically, but I'm assuming this reported earnings as well, and it just did not make the cut. Let's see Enphase, what this one is doing in after hours. Okay, so Enphase was above the 20-day moving average, and this one's gotten obliterated. It's lost over 50% of its value. And yeah, very nice move in the after hours. A lot of these stocks that have just gotten crushed to kingdom come, then they're having these very nice balances after reporting earnings. All right, let's take a look here. So for my trades, today it was like a battlefield, and I had to navigate it. I think I did a pretty good job today. I had to make some tough decisions today, some tough calls. All right, so let's take a look here. So first of all, getting hit with more adversity. Snapchat announced they were doing a convertible debt offering, and that could potentially be dilutive. So Snapchat, this is one of my largest positions, really got hammered on the open. So sometimes when you're trading, you're going to get hit with adversity. In fact, you're going to get hit with adversity all the time. So the number one thing when you're a trader is you have to be resilient. You have to be like, oh, okay, my plan A didn't work. What's plan B? You have to just be able to think that way. You can't just like give up or get discouraged if things don't necessarily go your way. So Snapchat got hit with a tape bomb. Let's see how Snapchat did today. And I was like, you know what? I'm going to wait till the close. Right now, the open, it's tough to gauge what investors are really feeling. Let's see how they do throughout the session. And the convertible offering was received very well by investors. Look at this. We put in a nice green candle. So overall, at one point during today's session, we pretty much retested this 20-day moving average, and we were down over 6%. And we ended up closing down only 0.84%, which is not bad at all. That's like a typical, just day of give back. So yeah, it was good that I did not panic, but I did end up closing out 20% of my position. For a winner, closed out for 37.26. I had paid 34.79. I had taken another target a bit higher at about $40. So far this Snapchat trade has been a nice winner for me. But really, the only reason I closed it out was because with that convertible offering, that might slow down the stock a little bit. And I wanted to raise capital to put it into another trade. So I just took off a piece of that. My Vail common shares, shout out to Yarrow and the Pristine Capital Trading community. He was the one that really brought this stock to my attention. The technical setup looked awesome. And so I took this one for a trade and it worked out pretty well. So Vail. That's the best thing about being in a community. You have a bunch of different people sharing ideas and perspectives. And, you know, sometimes somebody pulls up a chart and you're like, wow, I didn't even see that one. It looks awesome. So Vail, this one got a nice breakout. And at this point, it's a little bit extended from those key moving averages. And I just noticed we have the 200-day moving average above us. So I was like, you know what? I'm going to book this for a nice little winner and just keep it moving and, you know, keep rotating this capital. So that's what it's all about in this environment, just locking down reasonable profits, because in an instant, those profits can just poof, go away. So yeah, this one looks like it could continue higher, but yeah, just decided let's go ahead and let's book this thing. All right, options trades. So heading into today's session, I was like, hey, I'm going to do, you know, one trade. And depending on how that goes, you know, if it doesn't go well, I'll put myself in the penalty box. If it goes well, you know, I'll keep going. Because heading into the session, things look pretty ambiguous. So I noticed the nice strength in Apple and Microsoft. And Apple, while the Qs were down, let's say 0.5%, Apple was like teetering on going from red to green, red to green. So I added, and this was a 2-star trade for me, these February 18th 172.5 calls. This was at 10:07 a.m. Let's go. So Apple, let's take a look at this chart. This thing, boom. I'm gonna try to go through these a bit quicker. So Apple, I really like the way this one is setting up. I mean, out of all these FANG stocks, this is the one that's closest to its all-time highs. Now it's within a stone's throw of the prior highs. It's pretty crazy. So here we are, we had a nice move off the earnings report, and ever since then, nobody's really been selling their Apple. We've just consolidated on low volume. So I was able to catch this one. I put my position on at like 10:07. So take a look here. So this was 9:30, 9:55. Yeah, I put it on right in here as we were just chopping around. And then throughout the session, we really got liftoff, and we kept moving. So this was a nice morale booster for me. So I closed out half of it for a 325. I paid 268. Closed out more for a 377. And then I closed out the remainder for 375. So nice winner in about an hour. I will likely roll this position out in time. That's exactly what I did. I waited for a little pullback intraday. I got long these Apple March 18th 175 calls for 530. And I increased my size. I went from a 2-star position to a 3-star position. And then as the price action got better, I added to it. So for my strategy and really how I go about trading, you know, my win rate ends up being about 50%. But what I try to do is just make sure if something works for me right away, I want to make sure that I'm sizing into it. So Apple, this one, I just really like this technical pattern. And I think if the market resolves to the upside, I think there's just a high likelihood that this one participates. And again, this is over a 6% weight in the S&P 500. So it's kind of like, it's actually very difficult for the market to have a great advance without Apple. And you can see we have this monthly value or a high right above us. If we can get up there, that would be a nice little breakout. And then suddenly those all-time highs are right in sight. And I noticed the IV percentile was pretty low for Apple. So that basically means the implied volatility of the options contracts. It's not like it's like super jacked up and the options are very expensive. So there's room for that implied volatility to expand to the upside. So that one, great sequence. Take a look at this though. This was my problem child. So this was a mistake that I made. Yesterday I had a great day trade in Tesla. And keep in mind, this is a 1-star trade for me, so this is pretty small. But then I got caught on the back end of Tesla, where the stock slid throughout the rest of the session. Like I re-entered it and it slid. And so today I found myself, hey, Tesla's moving to the upside, not bad. But my calls expire February 18th, and I have the 970 strikes on. The 970 strikes, it's not like they're so far away. But pretty much with this structure, I was like, Tesla cannot continue to go sideways, or else I'm going to lose potentially all of this premium. And granted, this thing could just have a nice run up to the upside, and it ends up being a great winner. But I was like, I see Apple moving. I see some other names that look a little bit better. So I chose to sell this for a loss and allocate those proceeds into Apple. So that's one thing that you'll see me do a lot. I'm quick to change my mind, and I'm not afraid to take my money out of something that's not working and then flip it into something that is. So that was probably like the toughest decision for me today, because there's always like that ego element where you don't want to take the loss or whatever. I was like, no, if I'm thinking about like what's the next best move, it's definitely moving into Apple. I will say though, this was not a good trade for me. Even though it was a 1-star trade, it was pretty small. I have to be better with these Tesla calls. These can just move so quickly. I need to make sure that I'm tightening up on that stop, because this erased the gains that I had from my Tesla trade yesterday. So yeah, in this environment, it's tough to get everything right, but it's just important. If you make a mistake, close it out, move on, and then boom, just on to the next thing. Then your mental capital doesn't get destroyed. All right, let's very quickly take a look at our options order flow. And for me, when I see that, that's just such a motivator for me, where I'm like, right now it's February, we're still in the beginning of the trading year. I know if I can clean up some of those losses and just make those a bit smaller, that I'm going to have a fantastic trading year. And for me, I just have so much confidence in what I'm doing. Now that's why it's motivating. If you just don't really have the confidence and you're like, oh my God, like you can really get demoralized by stuff like that. So you have to have the confidence in what you're doing. Let's take a look. Tradescape. Would you look at this? Facebook, a sea of puts. Facebook just looked horrible today. Tesla, a mix of puts and calls. SPX, a lot of puts going up. This is what I want to see on a nice day where we close above the 20-day. And then wow, ExxonMobil, all calls on a day that it was pretty weak. This is interesting. Amazon, a bit of a mixed bag, a lot of calls going up. QQQ, this is the moment of truth. Let's go. Everyone bought puts on the Qs. Now let's see what else we got. Google, mix of puts in and calls going up. And I noticed this, so before we wrap, I'll just pull this up. Let's take a look at our CBOE, and this is really what I want to see. So I noticed that the put buying really accelerated throughout the day. We started off and it was pretty much like, towards the lows of the day, a 0.88 put to call ratio, which is not complacent, but it's not fearful either. But then you can see the fear really got into these market participants at 2 o'clock. This ratio hit a 1. So I love to see when the market resolves to the upside, but market participants remain a bit bearish. All right, guys, that about does it for today's market recap video. Hope you all had a great trading session. I will see you all tomorrow.